From my years of experience as a professional trader, I have come to notice that traders can easily spot trade setups. Problem is, they do not know how to identify high probability zones in the market that can move price significantly in their favor. So in this episode, I want to show you the type of zones that you should focus on so you can have significant amount of pips in the market for you to make good money out of the market. If that's what interests you to know, then you need to stick with me to the very end of this video. If you miss any aspect, you will not be able to catch up with what I'm about to reveal to you now. But before we go further, let's get to the whiteboard and let me show you what I actually mean. Now, take a look at this. If price is going higher, you know that it will create inducement and move higher. Now, let us assume that price has gone up like this and has tapped into higher time frame zone. Once it taps into higher time frame zone such as this, as price is coming back down from your higher time frame, you need to mark your change of character or shift in market structure, which is this one here. So this is your shift in market structure on the higher time frame, or if you like, you call it chalk to make it simpler for you to understand. On the higher time frame, first of all. Now, on the lower time frame, remember that every time frame has its own change of character. Okay, this is a major change of character. Let's assume that this is 1H, and now on the 5M, for instance, you want to find the same higher time frame zone here, and price on this leg is coming into this higher time frame zone. Let's do it this way so that it can be easier for you to understand. Okay, so price has come into this higher time frame zone on your 5M. That is, this is your 1H and this is your 5M. Now remember, the chalk here on your higher time frame is this chalk here. Let's assume that it is this chalk here on your higher time frame. Okay, now on this your 5M, you also have a chalk. This is known as your major chalk, which is this one here. And now this one is also your chalk, but this is your 5 minutes chalk, and this is known as minor chalk. This is your major chalk. So what you want to do is that as price is coming back down, okay, you can start taking your trade. Once it breaks this 5M chalk and closes below it, now you can start taking your trade if it gives you something like this. So it taps on any area of interest there and goes down. Now it gives you another one like this, taps on any area of interest here and goes down until it breaks this major chalk. Once it breaks this major chalk on your 1H time frame, I'm talking about this 1H time frame now. Now on the 5M, price has come to break this major chalk here. Now once it breaks that major chalk and gives you an inducement and then takes out that inducement, if you find any OP here, that's your high probability zone for you to go short. Okay, that's your high probability zone to go short. And where are you going to go short to? To this break of structure here. This is your major structure low, and this will become your major structure high once it takes out this major structure chalk here. So you want to take your trade from here on the 5M to this your major structure low here, or you call it external liquidity. Simple. So you are going to take your trade all the way down to this external liquidity. 70 to 80% of the time, price will surely move significantly to this external liquidity on your 1H, and that's where you are going to target. All right, so this is the way for you to catch significant amount of pips in the market if you want to actually trade the 1H and the 5M. You can replicate this on any time frame. It could be the 4H and your 15M as your entry time frame. But you need to follow the same process I've told you now. Simple process. So I'm going to take you to the live chat now and show you what I mean. Now, this is a video. You can go back to it. If I'm too fast, you can go back to it and watch. All right? Let's get to the live chat and let me show you what I'm telling you about on this diagram. So, as you can see, we are pretty much bullish, but we need to mark out current structures in the market to enable us to understand where we are in the market. Now, as you can see, price printed this high. For this high to be confirmed, it needs to take out inducement. And where is the inducement here? Well, your inducement is right here. So it took it out to confirm this high. This high becomes our major structure high. And as you can see, price took out that major structure high. Remember, this is our major structure low. If price comes back down and takes it out and closes below it, that means there will be a change of character there, or a shift in market structure right there. Okay? So now we have this high in place. This high needs inducement to confirm it. As you can see on this leg, there is no other pullback other than this. So where we marked as our chalk here, if price maintains this structure, it will be called inducement in this instance. Okay? Now, but if price now goes back higher to break this high, then this will become our new inducement. So we can now have inducement here, and this one remains as our change of character. I hope you understand what I'm trying to say. Please try and understand. This is very important. So let's continue to move price and see. So as you can see, price has taken out this high to create a new high. For this new high, we need inducement. And so where is the inducement? Inducement is right here. It's our inducement in the market. So we continue to play price. Remember, this is our chalk, okay? And it's our point of invalidation. If price comes to take out this major structure low or external liquidity here and closes below it, that means that this uptrend is over. So we are going to wait for price to take out inducement, and then we mark our area of interest. So we continue. So price took out that inducement. Where is our area of interest? Well, as you can see, all the areas of interest have been mitigated. Okay? So if you want to use this as your area of interest, it's already mitigated. So we cannot use it. Okay? Because it comes before this inducement. And if you want to use OB, where is the OB for you to use? This one is also mitigated. So we cannot use it. Now, which other one can we use? If we want to shift it to the next candle, but it has to have a fair value gap, so we can shift it to this candle. It is already mitigated. So everything here is mitigated. So what do we do? Well, if it takes out this external liquidity with a candle wick, we can enter the trade going long. But let's see what happens. But if it closes below it, then this uptrend is over. We are now bearish. We continue. So now we have a chalk in place here. Okay? Price has closed below it. And then we have our range high here. Now that we have a chalk, so now price has been converted from this bullish structure to bearish structure. And therefore we want to start marking our inducement because we want to go short. So the first inducement we have to mark is this one here. So if price takes out that one, then we can mark our areas of interest. Now let's continue to move price. Look at this candle's high. If you look at this candle's high and this candle's low, they are protected. Can you see? They are protected. So all of these are inside bars of this high and low. Okay? So this is not your valid pullback here. I hope you understand. I just wanted to to know that one. That's not a valid pullback. So our inducement is still okay where it is now. So we continue. Okay, so it didn't take out that inducement. It created a new structure in the market. So we can move our inducement to this point. Simple. Now, if it takes out this inducement, then our structure low will be confirmed. Let's continue. Okay, so as you can see, this inducement has been taken out, confirming this as our range low right here. Just follow me and then you'll be glad you did. This is your range low, and remember, this is your range high. This is your range high. So this is our trading range. Now that it has taken out inducement, so where do you have your areas of interest? First of all, focus on order flow, and we want to start from the top here. Look at this order flow is already mitigated by this pullback. Okay, remember, these are not valid pullback. This is not a valid pullback. This one is a valid pullback. As you can see, it has mitigated it, so we cannot use that order flow. Let's move it to the side first of all. And now the next valid pullback is this one here, this one. And as you can see, that is also mitigated by this pullback here. Okay, so we cannot use that either, so we move it to the side. And now the next one is this one here, which has also been mitigated. It is before this inducement. Any zone, any OB or order flow before your inducement is smart money trap. I want you to understand that. So we cannot use that one either. That one is a no-no. So we have only two zones to look at here. Now, because the order flows have been mitigated, so we want to resort to OB, and you want to start from the top here. So where is the OB here? Well, your OB is the last buy candle before the push down in the case of this. So this is your bullish OB. We pull it out. Now your OB has to have fair value gap. That's very, very, very important. It has to have a fair value gap, and it will give credence to your OB if it takes liquidity. And as you can see, liquidity is taken. So this is a strong zone to look at. Where is the next OB? Well, the decisional OB, there is none here. Everything here is mitigated. It's only this one. So let's continue to advance price and see what price will do. I told you I want to show you high probability zone. This is not the high probability zone I'm talking about. I'm going to show you very soon. Just stick with me. So we want price to get to this our zone, and then we know what to do. Okay, so price has tapped into this zone now. Look at it. Price has tapped into that zone. So now this is your higher time frame zone, like I told you. Remember what I told you? This is your higher time frame zone now. Now, where is your chalk? You need to mark out your chalk on your higher time frame. Now, your chalk on the higher time frame is this one. That's the 1H chalk. Now, once you have marked out your chalk on the higher time frame, now let's drop down to the 5M. So now on the 5M time frame, you also need to mark out your chalk. And so where is your chalk here on the 1H time frame? Well, as you can see, your chalk is right here. This one here. So we need price to come and take out this 5 minutes chalk. Now remember, this is 1H chalk. Okay. Remember I said I'm going to show you high probability zone. Now follow me carefully now. This is the point. So let's continue to move price and see what happens. Okay, so price has taken out this 5 minutes chalk. Remember, your chalk indicates that we want to start going down. We have been converted from the bullish structure to bearish structure. So where is, we want to wait. 5 minutes chalk has been taken out, but this 1A chalk is still very much in place. Now that chalk has been taken out on the 5 minutes and close below it, where is your inducement? Here is your inducement in the market, guys. Simple. This is your inducement. So let's continue to advance price. Okay, so price did not go to take out that inducement. Rather, it took out this 1H chalk. Now, this is very important for you to understand. Let's get back to the 1H and let me show you what I want to show you. Look, price has taken out 1H chalk. After chalk has been taken out, you want to see a retracement. When price retraces and then it has come back down again to take out this low before it will go back up to take out this inducement. Without this retracement on the higher time frame, you cannot get inducement, and you need inducement to be able to enter your trade going short, both on your higher time frame and on your lower time frame. So it is this pullback phase on the higher time frame that we want to capitalize on. But where are you going to take your trade as the pullback is happening? How do you know that this pullback on the 1H will end at a particular point? You will only know that on your 5M time frame. Okay? I want you to understand that it is on your 5M time frame. Now, the high probability zone is the pullback, the first pullback. Please take note of this. The first pullback after higher time frame chalk. That's your high probability zone. That will give you significant amount of move in the market. It will lead you to the 1H break of structure 70 to 80% of the time. 70 to 80% of the time, it will lead you to that break of structure. Okay? I hope you understand what I'm trying to say. So, the first pull back on your higher time frame after chalk is your high probability zone to always target. Now, you will do that on your lower time frame. So, let's get back to the 5M and let me show you what I mean. So, it has taken out the 1H chalk, which is your major chalk in the market, and it's pulling back. It has to pull back. Now, we have identified on the 5M, where is your inducement? Your inducement is here. I'm very fast because I don't want this video to be long. This is a video you can watch it over and over again. That's our chalk now. If you don't understand what I mean, that's our chalk. Look at what happened here. Price printed this low, pulled back up, and then came back down. So this is our chalk. Okay? So now let's continue to move price. Okay, so now price has taken out that inducement. This is the 1H retracement. After chalk has been taken out, on the 1H is retracing to where? Well, we have to identify our zones. Now start from the top here. Where is our zone? If you mark this as our zone, that's completely fine. That's our zone. Okay? That's the only zone that is available. Now, but within this zone, you can refine it if you so like. You can refine, because this is too large, even though it is 5M. But you can still refine to get very, very small stop loss. Okay? And so how do you refine? Within this zone, you have this order flow here, which is completely okay. But when you are refining in a large zone like this, you need to consider the extreme order flow. And where is the extreme order flow here? Look, if you mark this as your order flow, as your extreme order flow, it's already mitigated by that candle, as you can see. That's a valid pullback there. Okay? It's already mitigated, so we cannot use that one. Now, the next one is this one here. Look at this. That's your order flow. So, if you ask me, out of these two refined zones, which one should I go for? I will go for this. I will go for this. because this is the extreme within this box. And because this is the extreme within this box, if it doesn't come to it, then I miss the trade. Remember, the more refinement you do, the possibility of missing the trade is there. So, but I'm going to go for this. So let's continue to advance price. Now let's get to the 1H so that it can be faster. Meanwhile, let's move this. Let's bring it out. Let's get to the 1H so it can be faster. Okay, remember it is this extreme that I want to go. I want to go with. Okay, so this is it. And this. I'm not going for this, but I just want to show you what is going on in the market. So let's continue. Okay, so as you can see, it tapped precisely into this. Can you see? So I want to take my trade from there like I told you. So my stop loss just above my TP will be, first of all, will be here. And then after then, I can start trailing my stops. So let's get back to the 1H. First of all, let me know exactly. Okay, this is the 1H. So where is our break of structure here? Let's identify our break of structure. Our break of structure is right here. Okay, right here. This is our external liquidity. So we want to target that external liquidity here. That's going to be crazy. If it goes our way, it's going to give us 13.45 hour. So let's continue to advance price and see. That's the way for you to take trades in the market. Let's see whether it will go our direction. So price is beginning to move in our direction. This is not cherry picking, okay? This you can find everywhere on your chart. I'm trying to, okay. So let's continue. Okay. Can you see the massive thing we are getting? This is not just a selected thing. If you go back to your chart, that's what you will find. You can actually add to these positions if you like, but I don't just want to add to it. Let's see whether it will hit our TP. Okay, so I think it's getting close to hitting our TP. Let's see. So as you can see, getting close to hitting our TP. If you have the nerve to hold it, and boom, can you see that? It has hit our TP. Simple. Can you see it? It has hit our TP. So that's how to take high probability trade setups in the market. So as you can see, it gave us about 13 hours. It gave us 14.31 hours. Okay, 14.31 hours. So that's the first example. Let me just quickly show you the second example and we call it a day so that you will know I'm not cherry picking. Okay, so this is another example and this is going to be our final example. Now, as you can see, we're pretty much bearish here. The first thing we need to do is to wait for our inducement to be taken for us to confirm it first of all. And as you can see here, inducement was taken out here. So that's our inducement to confirm this low. The next thing we need to do is to mark out our areas of interest. This is our high. This is our major structure high. Let's identify that one first of all. Why is that our major structure high? It is because, look at here, price took out this high. This is our inducement in the market to confirm this low. So price took out this low, close below it to confirm this high. So this is our trading range, range high, range low. So now we start from the up here, the top, to mark our areas of interest. This is our first area of interest. From here, remember I said focus on order flow before you talk about the order block. Okay, now the second zone is this one here. The second zone. Now if you think that it has mitigated, this is not a proper mitigation. Okay, you need a valid pullback to confirm your proper mitigation, and so this zone is still fresh. This is still a fresh zone. So these are the only two zones. This one is mitigated already. If we mark this one, it's already mitigated, as you can see by this pullback. So we cannot use that one. So that's a no-no. So these are the only two areas of interest that we look at. So we continue to advance price and see what happens. Remember, this is the 1H. Follow the instruction. Okay, so price has tapped into this zone. Will this zone hold price? We don't know. Now that price has tapped into it, where is our chalk? Mark out your chalk first of all. Our chalk is right here. Okay, so let's go to the 5M and see. But remember, this is decisional area of interest and this is extreme. Decisional area of interest is 50-50. Okay, it's low probability, but this one is of higher probability than this one. So now we can go to the 5M and wait for price to take out chalk on the higher time, on the lower time frame. And so where is the chalk on the lower time frame here? Well, I think the chalk on the lower time frame, I think this is lower. Am I correct? This looks lower. Or we want to mark the clear one. Let's mark this one, which is the clear one. This is our chalk on the lower time frame. This is your 1A chalk. All right. So we continue. Well, as you can see, price has taken out this zone. This decisional area of interest did not hold price. Can you see that? It took it out. So we want to go back to the 1H because that decisional area of interest did not hold price, as you can see. Now, so meaning that this is the zone we are now going to target. Let's take this one out so that it doesn't confuse us. So now our chalk will now be transferred because it will depend on how, let's see, let price get into this one first. No, it is yet to tap into this now. Price has tapped into this. So where is our chalk in the market here? Well, our chalk will be moved from here. It's no more there to this zone. This is where we have the chalk now. Okay? So now that we have marked the chalk on the 1H time frame, let's get back to the 5M and now mark the chalk on the 5M. So where is the chalk on the 5M? Look at it. Look at it here. That's your 5M chalk. So let's continue to advance price. Now, so we have a new high in place. So this new high, for this new high, where is our chalk? Well, our chalk can now be moved from here to this. It's still okay where it is. It is still okay where it is. So we continue. Okay, so the 5M chalk has been taken out. The 5M chalk has been taken out. But what we are so much interested is this 1H chalk. Once it takes out this 1H chalk, then we can now begin to look at the possibilities in the market. You can have possibilities to enter the market here going to this point. But once it takes out this 1H chalk, that's where our focus should be. So let's get to the 1H and make price to play till it takes out this 1H chalk, so it can be faster. Okay, so 1H chalk has been taken out. We have gone too far. Let me take price out from here. So the 1H chalk has been taken out. Now remember, like I told you, we're expecting after taking out chalk on the 1H on the higher time frame, we want to see price make a retracement. It is in this retracement on the 5M time frame that we want to get high probability zone to enter to take price lower. Why? Because when we enter here, we want to target this low here. Why? Because for price will come back to take out this low, and before going back higher to take out this high. So this will be our first target, and then the second target will be our break of structure, higher time frame break of structure. I hope you understand what I'm trying to say. Please try and understand. Now, so we can go back to the 5M now that we have a break of this chalk on the higher time frame. So where is our inducement on the 5M time frame now? Well, our inducement on the 5M time frame for now will be this. That's going to be our inducement. So let's continue to advance price. Okay, so inducement has been transferred to this point now because it has created a new structure. This is our new inducement. So let's continue. Okay, so now the price has taken out inducement here to confirm this low on the 5M. Where are our areas of interest? Only two areas of interest work, so we can begin to look at it. This one here, this zone, and another zone is this one here. Within the zone, you can refine it. In refining the zone, you can take it to this point. This is your refinement. Simple. From here down to this place. That's your refinement. So let's continue to advance price. Okay, price has tapped into it now. So you can actually take your trade from here going short. So as you can see, price has even closed below this low, telling you that this is a good zone to take your trade from. So we want to sell this market from here. So you want to sell the market, your stop loss just above. The first target you target is this low here. Okay, that's the first target. After that target, let's get to the 1H and see where we will target ultimately our external liquidity. Now this is our external liquidity. Okay, that's our external liquidity. Let's play price from here, or let's get back to the 5M and play price a little bit and see whether that zone will hold price. Okay, so price has tapped into it, is going our direction. Let's see. So now we can actually go to the 1H to make it faster. This is the 1H now. Let's make it faster. Boom. See now, our first target has been achieved, and so we are going for the external liquidity, which is here. Can you see? Now remember, let me show you so that you don't think it has taken out this zone. It hasn't taken out this zone, so this zone is still there. Okay, so this is our external liquidity. Meanwhile, it has hit our first TP, so we want to move this to our second sorry, you want to move this to our second zone. We want to move this to this our ultimate target, our external liquidity. Okay, so if price takes out our external liquidity, it would have hit our ultimate take profit. So let's continue to advance price and see what happens. Boom, can you see that? So this is the way. Once you can identify the first pullback after the higher time frame chalk, that once you can catch the move there, right there, that zone there, it will take you straight to your external liquidity, which is your break of structure. All right, so this is the way for you to really make a kill of the market every single day in the market. So if you are like a crocodile that waits for the best of time or the best of meal, then you should be checking and waiting for the higher time frame chalk to be taken out, and then the first pullback after the higher time frame chalk, you enter your trade on the lower time frame, because it's going to give you a significant amount of move in the market. If you are new to our channel, please consider giving us a subscription and turn on the notification so that anytime we publish a new video, you'll be notified about it. And if you haven't joined our free Telegram channel, please do so just immediately. I will leave all the links in the description. And if you want to become part of our VIP community, the doors are open. Please take advantage of it and you'll be glad you did. All right, guys, thanks for watching. I see you in our next video.